Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, June 17th, 2021. I'm starting the video just shortly before 3 p.m. Eastern Time, so we have an hour to go. As I mentioned yesterday, I'd be out this morning. Actually, the second appointment ran a little later than I thought, but I've been back at my desk for a little while now. I had to get my bearings on everything. So what I'm going to do is another update similar to the one yesterday. We're going to start out with the major stock indexes, touch on XLF, the financial sector, do an update on gold and the US dollar, as well as DJP, the general commodity ETF, and crude oil, natural gas, and AMC. So pretty much everything I hit on yesterday. The reasons keep it focused. There's quite a few trade ideas unrelated. And again, the one reason we're looking at the market here, S&P 500 is mostly flat, but it's those sectors that are both trade ideas, most certainly the financials and industrials, the one I was waiting to go. And I want to speak to tech as well, because so far we're seeing to a fair degree that sector rotation I talked about recently, and I'll get on that in just 1 second. So this is again what I call the BOD, or benefit of the doubt trend line. The primary trend line goes off the March lows. That's all the way back here, and March of 2020 after COVID hit. So we're right there. And again, the divergences are big. They're growing. I still, the charts to me indicate a sizable correction is likely and imminent as well. Imminent, that can be defined. There's no set time frame. It just means very soon, and could happen today, tomorrow, or we could push up. And everything's relative. Here's a bottom that was put in. This trend is going on from over a year now, last March. So could be a matter of weeks. But I do think it's more likely closer to happen any day now, especially based on those other factors I talked about, the financials and industrials breaking down. But let's just, before we move on to those two, let's look at QQQ. And see today, tech's up 1.4%. We had a sell signal yesterday, which has been proved to be pretty much a whipsaw signal. We can call it that. This is my 60-minute chart of QQQ. Yeah, the trend line here, we did have a reaction low there, so we can go like that, draw it that way if we want. But either way, we're back above that trend line right now. Now, the divergence, which was confirmed recently, is still in place. So I'm going to remove the unconfirmed because we've definitely put a lower peak. We had a crossover here in the PPO, but when you look at the RSI, we didn't have divergence at that last high. We had PPO divergence right here, if you follow the horizontal lineup, but not on the RSI, and we do now. So that is the one difference. Before we have divergence there, as well as a PPO, and from the PPO we've been diverging since that point there. So and again, I talked on that before when we got the breakdown of the financials. I said, look, one potentially bullish scenario or development that could offset those sell signals in the financials and industrials would be to see rotation. So I was right on that call, most certainly right on that call, and we'll get to that in a second. But at the same time, we've seen money coming out of the financials and industrials. That money has been moving, or at least a good part of it, into the tech stocks. Now, based on that, there are enough sectors breaking down, and you combine the financials and the industrials alone, and that about equals the weighting of the tech sector. Tech, remember, is about 25% in the S&P 500. Financials are, let's see here, let's go to this board, about 11%. I haven't updated that number in a little while, and industrials are about 18 or 8%. So you have close to 20% weighting in these two alone. And here's XLI playing out on Q. So this has been profitable for a short trade since we had that sell signal. We hit today, and so far trading below that first target of 101.37. You zoom in nice and tight. Again, almost all red sticks, pretty persistent selling. And today that selling is starting to accelerate. And again, there's that first target, 101.37, that's been hit. We'll see where we close today. It wouldn't surprise me if we snap back closed on it. But if we do print a solid close below, whether it's now or anytime soon, then that opens the door to move down to that next target and 97.80. You also have a little minor downtrend line forming there as well. If they pop that, maybe you get a little more upside, but as of now, that's that. And again, it's, all near-term stuff. It's hard to call the squiggles. I try to do it, and quite often I can get the zigs and zags along the way during an uptrend or downtrend. But that, isn't as easy as the bigger picture. Bigger picture says these divergences, when they do play out, are going to be more than just a, so far, what is that drop in the industrials? About a 5.5% correction. These divergences indicate a much bigger drop to come. All right, let's look at financials. XLF. And really impulsive selling. They were down 3%. See this red candle here? We haven't had anything like this in a while. And this is kind of that, what I like to call point of recognition. I talked about it before. We've had pullbacks along the way, and usually they're bought up. Dip buyers step in. At this point, we took out first the primary trend line right here. That was our sell signal. Reason to be short the financials, and then follow up red candles. Then we took out that secondary support line, and today we're taking out the 50-day, and we'll see where we close. The 50-day, you probably can't see it in the video. I have the line turned down. There's a yellow line coming in right here. And we're at this point in time just below that. I still have pretty high degree of confidence we'll at least hit my first target, especially with what's going on now. 35, 33 unadjusted targets. You don't want to cover a little bit above if that's all you're shooting for. If you're shooting for T2, that's at 32.83. Again, the actual support level, you'd want to put your limit buy to cover limit order just above that, and then T3, which at this point in time is my final target. Depending, if we can get the party started on the downside and we start to see tech and everything else roll over, I very well may extend this, and quite likely will, to this next support level there, about 28.88. And that would be, a things getting ugly kind of correction, because that would be a drop of about 25%. Right now I'm calling for a drop of about, from the highs, about 19% down to that third target. And then just while we're here, because again I've been hyper-focused on this sector, and want to point out a lot of these stocks, JP Morgan, benefit of the doubt, support level at 105, 157.08 is taken out. That was the trend line. That gave you a sell signal there, and then you took out that. And that was a pretty important level, I believe, because it was resistance here. We had a breakout, successfully back tested it, and now that breakout, this whole breakout right here has failed, and that's what we call a bull trap or a fake false breakout. And they're pretty bearish, because you have people take the breakouts, that's why they call it a bull trap. People go long, and when they realize, the breakout didn't fail, they exit. Their stops are getting hit, or they just decide to pull the plug. Short, small blood in the water, they pile in. So again, there are no guarantees, but this increases the odds significantly for me that we're going to at least go down to that next target there at 146.48. And again, that's bigger picture stuff. This is the largest financial, JP Morgan. It's almost a $500 billion company. Next up, Bank of America at about 361 billion market cap, taken out, and that's why you're seeing these big candles today. They're taking out support, that 49.39 level, and still well below trend line. I mean, again, this was our sell signal, and we've been moving steadily lower since. So that's it. I just wanted to, as I'm going through the video, updating these, because remember a few days ago I said, look, we have quite a few of the financials breaking down, but then there are quite a few still also hovering above support. Those support levels are going today. So unless we get a stick save, which it means a reversal by the close, or maybe tomorrow we snap back, or in the next day or so, to regain those trend lines, then this proves to be a bear trap or a false breakdown. So we'll watch that. But as of now, let's take it on face value and call it what it is. And those are check marks, additional check marks for the financial sector, which of course provides additional check marks for a potential short in the entire broad market, the S&P 500. All right, so I won't go over each and every financial. You get the point. By now, as of today, especially with the big down day in the financials, most of those that I had just highlighted recently at or just above support have now broken down, further increasing the odds that we'll see more downside in the financials and the broad market. Let's update gold from here. Gold, last night I came in late, did a video and told you to hit that 1802 level almost perfectly, or 1803, it's 1802.80 right there on the chart, and bounced, and I had a reversal there, I was out, and that's why you use stop loss orders, especially when you're away. You have good to cancel I like to do OCO orders. OCO orders say, okay, you're going to go long gold. You're going to buy there. You're going to cover a short, reverse to a long. And at that point, especially if you're not going to be in front of your desk, you're part-time trader, you got to step out, or even you may be around, but you want that discipline that orders give you. An OCO order means one cancels the other. And so at that point in time, you place a sell limit order. Say you were targeting a bounce back to 1848. So you have a sell limit order, good to cancel at just below that. We'll call it 1846, whatever your number is. And then another one, a stop loss order below your whatever your stop is. Now, if you bought long right here, you'd give it a little bit of room below the support level, and therefore, if you tag that as an OCO, those two orders are tied together. So when the first of the two is hit, whether it's your stop or your sell limit, then the other order is automatically canceled. Now, where I want to go is, so we broke support, and as often is the case, when support's broken, boom, we got a bounce. There was our bounce or reaction off the initial tag. The divergence that was there, I pointed out yesterday, that's been taken out now. We had, at that point, positive divergence, but that was taken out. And then see what happens when support broke? We didn't just kind of meander around, boom, right down to the next target. And this is what I wanted to do an update on gold for. That is support here, and it was the next support level, on the chart, or is. But more importantly, we're going to go back out to the daily chart. I know a lot of you guys and gals trade ETFs, so GLD. Remember this chart? I haven't updated it in the last few days, but many times. I've had for a long time this buy zone. In fact, when gold topped out, talking about that as a target, said if and when we got down to the buy zone, I'd start scaling in at the top of it, which is moderate support, and I said it would be a gift if we got down to the bottom, and it was, and that was the re-enter long-term positions. And look where we are now. We're all the way back to the top of the buy zone. So you, just like I pointed out on the day we hit it right here, and that was good for a nice swing trade in gold. We had that bounce. Didn't prove to be the end of the correction, but this did, and that was highlighted there. And then again, you had two opportunities to get in, and I think that's it. I may be wrong, but based on my analysis, I think that's the bottom of the correction in gold, and that this is the first leg up, corrective wave, and you can see there's trend line below, there's support here, but we're at the buy zone. So I wanted to point out this is, or at least today's low, and even now, an objective level to step in. And if you're a long-term investor, you can do the same thing. You can scale in, take maybe a half position here, and then add down to, but not below 158. I do not want to see gold go much below 158. That just wouldn't be a good thing. That's a very solid support level. Other reasons why I think this is a corrective wave in a new leg up is a trend indicator. I use this PPO signal line, the 9 EMA, because it's the last two to cross, and when it's trading above, when that line's above the zero line, which is there in the middle, you tend to have a bullish trend, and when it's below, you have a bearish trend. This was all bullish. That was almost a whipsaw. It was a little whipsaw. So pretty much here it said be long gold, here be short gold, and here we're clearly above it. So that helps support the case that this is a pullback and a buying opportunity. So there it is. Whether you're a swing trader, I can't make as strong a case for a swing trade. I'd love to see some 60-minute divergence on the charts here. This is GLD 60-minute chart, and I showed you the futures. But for a long-term investor, I can make a pretty decent case on a pullback to support. Again, if not so much as a very hard buy, but maybe more of a soft buy, a scale in, or you can take a full position, just manage your stops appropriately. So I am viewing this pullback in gold as a buying op. And if nothing else, for weeks now, it's not always about nailing entries and exits. For weeks I was being pretty persistent that this was not a good time to be buying into gold if you were thinking about it. In fact, it would be a good time to be selling gold, taking profits, and then we had multiple sell signals. So we're kind of just using the charts to look at when to start getting into stuff, when to not get in, when to sit back and wait. And that, let me just update the dollar, and then we'll get into commodities, because that will segue into my what I'm going to talk about in commodities as well. DX, where is my dollar futures chart? Give me 1 second. I've got it somewhere here. There it is. All right, let's see where we're at. That one needs to be refreshed. We took out, that was my bounce target, since back here, pointing out the divergences, expecting to hit these targets, and ultimately 91 to 373 we did. As I mentioned last night, that's also when gold hit that support level / downside target, but then the dollar broke that resistance, and so that's bullish, and that accounted for that additional leg down in gold today. Where we go from here, I probably should have had some additional levels for you beforehand. Again, I was only looking for a counter trend rally in the dollar, and still am. I'm still longer term bearish, just been near term bullish on the dollar recently, and that was a level I should have had marked for you. I look for these reaction lows like that, and we have some reactions here, and so the dollar hit resistance. And hard to say. I can't make a strong case to short the dollar, but I do think the run may be over, and I can certainly say I don't think it's objective to be going long the dollar anymore. Like I said, I'm going on the other side of that trade now, and for gold to rally, it's going to help to see the dollar come back in. So I do think that may be the end of the run for gold, for the U.S. dollar, the rally. I just can't speak with the highest degree of confidence, and I also need to study the longer term charts as well, the daily, weekly, and look at the euro US dollar as well as the euro itself, and I will do that. Now let's get into commodities, and we're almost finished with the video. Okay, so like I was talking about gold, I know a lot of people don't short. Throw short trade ideas out there, just like I will long trade ideas, but then I also speak to those that don't like to short, whether you don't know how, or you don't think it's anti-American or whatever. I've heard it all. I get it. Or you don't have a margin account. You can't short in a cash account or an IRA unless it's your broker allows it with commodities. But this one, DJP, the all-inclusive commodity ETF, and been highlighting it recently. And that's it. That was where I said we hit the top of the channel. That's when you want to get out. Top of the channel. And then once you reverse off the top of the channel, the next stop is usually the bottom of the channel. So here it is. We hit that level. That analysis was good for either if you wanted to short commodities, at the very least, like I said, get out, start taking profits. And if you don't short, don't add. That was kind of the risk reward wasn't good. We're probably going to get a correction in commodities, and that's it. And just about all commodities have fallen, and today that kind of trade accelerated. So I think it's what it is you get in a bull trend, you get people starting to buy high, chase. They didn't want to buy at the bottom, and they're underwater. And this, to me, again, I'm viewing it as a correction, and I'm pointing out we hit that trend line. I have not modified this trend line. We hit it to the button today. So if you were short DJP, I can say with a high degree of confidence that's where you should have covered. Or at the very least, and it's not too late because we're just above it now, at the very least lower your stops. Where to? At least under today's highs. If we get up to that gap, we start taking it out. I mean, again, the bottom line is we hit the downtrend line. You can go long. Keep in mind that sometimes you hit the bottom of the channel, the uptrend line, and it's one and done. Well, this time you went halfway up, and I've talked about that as well. You can put a midpoint line in just about any price channel, and you'll see that quite often that midpoint line acts as support and resistance as well. So in this case here, you bought the bottom, you ran up to the midpoint. That would be your quick swing target, the midpoint of the channel, and then you drop down. You hit it again, midpoint. Finally, we took out the midpoint here. You go to the top of the channel. Fell down, danced on the midpoint for a while, broke it, and then you go to the bottom of the channel. This time we didn't have a reaction. We broke above it, back tested, went to the top. So that's it. So where do we go? Got to be careful. Back here and here, when we hit the bottom of that price channel, that trend line, we weren't coming off a big divergent high. Right now we are. See that negative divergence? So this tells me there is a decent chance that we may break below the price channel. But again, you can go long. It's objective. You go long, just don't get married to it. Have a stop somewhat below there, maybe on a daily close below the channel, because if you break the channel, we're probably going to hit that support potential target down there at 23.33. But you can buy it. And if you want to play a bounce trade, I'm going to modify the trend line a little bit for you. I'd say somewhere around there, which also coincides with the top of today's gap. That would be yesterday's close. So, You can certainly do that. I'm a little more apt to just kind of sitting tight on the whole commodities thing now. And I did want to tell you, I plan to do this today and or in tomorrow, probably into tomorrow. I'm going to go through all the individual commodities because you know me, find me a bull market, a bear market, and something, especially a broad-based, the stock market, a sector, or in this case, generally speaking, commodities. And there's always, at any point in time, especially with the commodities, there's going to be some with bullish charts that are going up and some with bearish charts because not all commodities are equal. Soybeans has nothing to do with copper. And so that's what I'll be looking for. And if I see any standout trading ops, whether they're swing positions and most importantly, looking to re-enter for those of you that maybe took some profits recently on your commodities for longer term positions, and you're looking to get where to get back in. I can say this is objective. We're in an uptrend. But I can't say it's an all-in moment again because we're coming off a pretty strong divergent high. So maybe start scaling in there down to, but not below the 2330-ish area, somewhere around there. Okay, two more to go, three more to go. Crude, natural gas, and AMC, and we'll wrap it up. All right, crude oil. Crude oil played out well. There's that. I'm going to zoom in a little bit. This is a 60-minute chart, but let's zoom in a little tighter. Focus on the most recent chart pattern, which is this uptrend line, rising wedge type pattern. There was your breakdown right here. Breakdown, perfect back test. So if you missed the breakdown, back test, and then we started moving impulsively lower, and that was confirmation we're getting rejected off the back test. And then boom, we shot right through that first support at 70.63. And again, these were the levels here in advance, 69.76. We hit it to the pretty much the button right there. You can see, I think you can see in the video. And we bounce exactly where we should. So that's all that is a bounce off support because we broke a pretty long-term, trend line on, again, 60-minute chart trend line. I think the bounces will be fleeting. So if you covered there, took the quick, what is that drop from the breakdown? That was a drop of about 2.8% from the level of the breakdown. If you trade crude futures, I don't have to tell you. Even the micro contracts, that would have put a pretty penny in your pocket. QM is a micro contract. CL is a big contract. I think it's a good time to book some profits. You have a reaction low right there. This is probably what I think we'll see in crude. Is another leg down to 68.52. Remember, they're selling commodities. Crude is a commodity. Yeah, it's benefited more so than some because of the reinflation trade, planes filling up, cruise ships gassing up again, all that kind of good stuff. Summer driving season's here, boating season. But again, how much of that's been priced into the big move? So there it is. Either way, crude playing out so far. The breakdown backtest, hit of the 69.76 target, bounce, and I suspect one more leg down. Natural gas, my last update, that one was laid out the other day as a short-term swing trading op on the short side after this divergent high right here. And I laid out this trend line as my preferred target, as well as that 198 level. When we hit the 39.198 support, hit it again, bounced, and I think we were here yesterday where I said I suspect we'll come back down and make another run and get a full tag of that trend line that I was targeting, and that did happen. But I also told you yesterday if it happens, which it did, it's only going to be about where we were at the low the other day. So if nothing else, certainly a time to book profits in my opinion, and also go long if you want. There was that support was a pullback target. It was a small divergent high. Nat gas is in an uptrend, and right now, or as of this morning, again, I told you I wouldn't be here. If I was, I would have pointed that out. We hit it. We have pretty strong divergence in place. Remember, divergence is not a guarantee we're going to keep going up. We had that divergence in gold yesterday, and that didn't pan out. But that's trading. You just do it mechanically. Don't second guess. If you have a decent case can be made and you have an objective long, go long, set your stop a little below and pick your price targets. I don't have an upside target for you now. I'd have to study the charts a little more. Kind of a let it run trade. We already hit that 327 target one or resistance level, so I think we'll punch through it. Then your next resistance will be the recent high, so you could target that, or recognize we're in an uptrend and just sit tight with the trade. Keep in mind, but remember, all commodities right now coming under pressure. Loop back to that DJP chart I just showed you, or the general commodity index. If that trend line breaks and we go much lower, I expect a bounce from here, but even if it breaks today, tomorrow, next week, that could put pressure on most commodities, because there are institutions and individual investors buying these broad-based commodity ETFs, and they come under forced selling pressure if a lot of people are getting out of that the commodity trade for now, taking profits or getting scared out because of pullback. That's that. And last but not least, we have AMC. Quick update there, just because there's been a lot of movement. And we need to go down to the world of the 15-minute chart, and there's that uptrend line I've been highlighting. We've held it so far, and that needs to go. That's that trend line now. I've been highlighting it. It's back here. We had a little triangle. We broke above the triangle, and that was bullish. Ran up 60, really around 62 or so, 65, 64 has really been a brick wall lately for AMC. So here we are. We're wedged in there. If they can break that out, that's near-term bullish. But if they break the downtrend line, the uptrend line, and remember, it was a valid trend line back here, and we had additional reactions the other day that helps to validate it. So therefore, that's the level. If it breaks, support levels are 51.60, 47.33, 37.63, and then 32.22 are what I'd have as potential targets or support levels to watch. If it means if 51.60 gives way, probably go down to the next one. So I'm going to add an additional line right there just to cover that previous reaction high and show you that's what we're testing now. So AMC bulls, or they call themselves the apes now, want to see that 64.37 level get taken out, and the bears want to see the trend line and then 51.60 get taken out. All right, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.